Two stocks to buy October 2020 edition. Welcome to the channel, guys. My name is Chris. Today, we're going to go over two stocks that have been beaten down by the coronavirus. We're going to go over what these stocks are. We're going to go over their stock charts. We'll go over why I think these stocks have a chance to recover. So please, hit that spicy like button, hit the subscribe button, and let's get started. First up, guys, let's take a look at Walt Disney. So it looks like from a year chart, in October 2019 till March at their bottoms, they were down about 35%, 34%. And from their highs, they are down about 15%. So this stock has been hammered through the last year, obviously because their theme parks have been closed. I want to take you guys through their website and show you some of their properties and the things they do. So they have Walt Disney in Florida. They have a Walt Disney in California. They do resort and spa, cruise lines, vacation clubs, Adventures by Disney. They have a Shanghai resort. They have a Hong Kong Disneyland, Disneyland Paris, Tokyo Disney Resort. They also have this huge streaming service they just come out with, and I think this is why the stock hasn't been beaten down even more, because they've probably benefited from this a little bit. They have Hulu, Disney, ESPN. They have The Mandalorian on there, Frozen. If you guys have any little girls, you know that they love Frozen. They even have the Avatar and Avengers. Star Wars, of course, on Disney. Let's take a look at this article on why Disney has been hammered so hard. It says, Disney is laying off 28,000 people in the United States as the coronavirus pandemic hammers its parks and resorts business. The company said 67% of the employees laid off will be part-time workers. Disney's theme parks shut down globally this spring as the pandemic hit, dealing a huge blow to the company's bottom line. The company profit dropped a whopping 91%. Holy smokes, guys, 91%. Chairman of Disney, staffing cuts were necessary because prolonged impact of the coronavirus on the business. So obviously, if profits drop 91%, you would have to lay off a bunch of workers, and that's partially why this stock has been beaten down so much. We have another article explaining why this stock's been beaten down. It says, Disney originally planned to reopen resorts located in California July 17th, but was delayed indefinitely. The company's resorts in Florida closes doors in March. Disney notified it would furlough employees whose jobs aren't necessary at the time starting April 19th. We cut expenses, suspended capital projects, furloughed our cast members while still paying benefits. So they were still paying benefits, but they had to cut the cast members. We simply cannot responsibly stay fully staffed while operating in such limited capacity. Theme parks and resorts business has arguably taken the biggest hit of them all. The segment operating profit fell 58% compared with previous years, a loss of $1 billion. Holy smokes, $1 billion, guys. On this report, Disney has also released a statement expressing their disappointment before issuing another announcement that the company would be laying off 28,000 cast members at Walt Disney World, a move that Disney stated was exacerbated by the state of California's unwillingness to issue reopening guidelines. So guys, there is no shortage on Disney's bad news for sure. That's kind of why the stock's been beaten down. I mean, their parks have been closed. They're laying off employees. They can't get California to let them reopen. They're having a lot of trouble globally. They have a bunch of parks and a bunch of employees that they're trying to keep paid and keep happy, and it's just not helping. So let's get into some good news on why I think this stock could recover. They're going through the measures to be cautious to reopen Disneyland. They obviously want it to stay open, and they don't want to close back down. So it says, enhanced protective measures, physical distancing, they'll have temperature checks, limited contact. The good news as of October 1st, 2020, is that the trajectory of cases in Southern California is generally trending downward. We do know that the statewide positivity rate is declining to 2.8%, as are new cases and positivity rates. Some great developments all around. I also want to show you guys some of the companies that Disney owns and show you why this company isn't going anywhere anytime soon. So they own ABC, they own an 80% stake in ESPN, Touchstone Pictures, Marvel, Lucasfilm, A&E 50%, the History Channel 50%, Lifetime 50%, Pixar, Hollywood Records, and many, many more. So their total assets that they have as of 2019 were 193,984,000,000, and they had a total liabilities of a little bit over $100 billion, which left them with a total equity of $93 billion on their sheet. So even if they lost $1 billion every quarter, it would take them 93 quarters to lose all of their money and go into debt. So this company is a very strong balance sheet. I also want to go through the income statement with you guys. As you can see, in 2017, they made $55 billion total revenue. In 2018, they made $59 billion total revenue. But in 2019, that number significantly jumped to almost $70 billion. See, the gap between 17 and 18 is only about a $4 billion gap. But from 18 to 19, it was about a $10 billion gap. So I'm thinking their streaming service is really helping them out in this situation. And I don't think that they're going to be devastated by the coronavirus and their theme parks being shut down, because they have a streaming service that's obviously everybody watches. I mean, if you guys watch The Mandalorian, put Mandalorian down in the comments below, please. Dave & Buster's website. So they do eating, entertainment, bring your family, sit down, have good food, play games. Alright guys, number 2, Dave & Buster's. So as you can see, this stock has really been devastated. From the beginning of the year to the coronavirus, they were down almost 88%. But now they're only down about 60%. Since the coronavirus, they've recovered 230%. I think they have a good upside from here. I want you guys to take a look at this chart I have up right now. This is kind of why they've gotten hammered so hard. It says food and revenues 48.1%, amusement and other revenues 51.9%. So you could see why they've been hammered so hard. They don't have a streaming service like Disney or any other way to make money. Their money is made through entertainment and food, and that's why this stock has been beaten down so bad. In this article here, it says closures led the chain's comparable store sales to plummet 87% in the quarter ending August 2nd, while revenues tumbled 85% to $50.8 million. Dave & Buster's warned in securities filings that it could be also forced into bankruptcy if it can't reach a deal with its lenders. So that's awful news. Back in August, they were saying, if they can't get money, then they're going to be forced to go bankrupt, and there wouldn't be no more Dave & Buster's. And finally, on this article, it says, they could lay off more than 2,500 employees, has filed notice in at least 10 states, including temporary layoffs imposed in March. Affected more than 800 workers. The layoffs would take effect starting November 8th. So these are some old articles on why Dave & Buster's stock got hammered. But ever since Dave & Buster's got hammered, they've been coming out with some more positive news here in the recent months and last weeks and stuff. Here's one of them. There are some early positive signs of recovery, including an improvement in foot traffic trends from down 79.5% for the week of June 29th to down 68.2% for the week of August 17th. Is dining back? No. Could Dave & Buster's be a critical indicator of the sector's return? Yes. So they're just saying Dave & Buster's could be a leader in the industry, and this is good news for the whole industry itself, expecting more people to come back into these places and buy more food, get out with their families, get out of the house and have a little bit more fun and not be so paranoid about the Rona. Floors said Dave & Buster's has so far reopened 91 of its 365 arcades where guests can sip beer and munch on buffalo wings. Concerns have already been disclosed. The stock climbed as much as 17.5% to $16.59 and was recently trading at $16.02. The ultimate destination to eat, drink, play, and watch is planning to open its first Lehigh Valley location, October 26th, Lehigh Valley Mall, according to the news release. So I would say if Dave & Buster's was struggling really bad, they wouldn't be opening up this location. It's supposed to be a 30,000 square foot complex. Will feature arcades with hundreds of games and state-of-the-art D&B sports bar. They're also looking to hire 120 people for front and back of the house positions, including managers, servers, bartenders, hosts, line cooks, and gaming techs. So why would they be hiring if this company's going under? Why would they be building a new store if this company's going under? It just doesn't make any sense. I just see a really strong comeback for Dave & Buster's. Families are tired of being locked up in their house and they want to get out and have fun. Now, I do want to state that this company isn't as good as Disney and they're more speculative, but that gives them more upside than Disney as well. So higher risk, higher reward. In 2018, they had about $1 billion in assets. Now they have about $2.3 billion in assets. They do have a current liability of $2.2 billion, so that leaves them with about $2 million on their balance sheet, which isn't good, but it isn't bad as well. Let's take a look at their revenue growth. Revenue's been growing really steady since 2017. So it looks like they did about $1 billion in 2017, $1.1 billion in 2018, and 1.2 in 2019, 1.3 in 2020. So I mean, they're still growing revenues, and that's great. And as soon as this pandemic or whatever you want to call it is over, their revenue should come back. I don't know how strong they'll come back, but I do think they'll come back strong because people, like I've said, they want to come out. They want to spend time with their families. They want to eat food and play and go to Dave & Buster's. Obviously, these companies have been devastated by this pandemic, and they're both speculative. I do think these companies are going to come back strong. Both of these companies revolve around getting out, going to the arcade, eating food, having fun with your family. And I think all of that's coming back in 2021. And that's why these companies are such strong companies to be in right now. You have such a long period of time to get into these companies and build a position that's really going to matter. So you guys let me know. Do you think Disney's going anywhere? Do you think Dave & Buster's going anywhere? Guys, thank you so much if you made it to this part of the video. Please hit that spicy like button. Hit the subscribe button. It helps me out tremendously. 97% of you guys that watch my videos haven't subscribed to this channel yet. So please, please, please hit that spicy like button. Hit the subscribe button. My name is Chris, guys. That's all for today. Peace out.